I remember it so clearly, like a switch flipping in my mind. A friend of mine saw someone we both knew, an ordinary guy, no smarter than me, become a Bitcoin millionaire overnight. One day, he was just like us, living a normal life. The next, he had fleets of cars, his own apartment, talking about financial freedom like it was the easiest thing in the world. And that was all it took. I was hooked. I could see it, feel it. My turn was coming. I imagined myself catching the next big wave before anyone else saw it, slipping into a world where money was no longer a concern. I saw the Rolls-Royce in my driveway, the mansion in some exotic location, the kind of wealth that meant my great-grandkids would never know struggle. Well, I now know it was foolishness, and you're probably laughing right now. Looking back, I can't help but laugh too at that chapter of my trading journey. Most traders enter the market with a Hollywood-style fantasy in mind. Huge wins, adrenaline-fueled trades, and the thrill of turning a small account into a fortune overnight. But if you don't know already, successful trading is repetitive, disciplined, and frankly, boring. The successful 5% traders don't seek excitement. They don't chase action. Instead, they embrace consistency, discipline, and small, steady gains that compound over time. The human brain is wired to seek novelty and stimulation. This is due to the dopamine system, which rewards us for taking risks and engaging in unpredictable activities. Casinos, video games, and social media all exploit this mechanism. And so does impulsive trading. Many of us expect to make huge profits overnight, but this mindset is based on instant gratification bias, our tendency to prefer immediate rewards over long-term gains. A trader risks 50% of their account on one trade, hoping for a huge win. If it works, they feel euphoric. But if it fails, they're wiped out. Meanwhile, a disciplined trader who risks only 1% per trade may seem like they're making slow progress. But in a year, they've not only preserved their capital, but steadily grown it. Long-term success isn't built on a single home run. It's built on hundreds of small, smart decisions that compound over time. The successful 5% traders follow the same process every single day. They wake up, analyze the market, take only their high-probability setups, manage their risk, and log their trades. No wild bets, no overtrading, just execution. For new traders, this routine might seem monotonous, but this is the exact reason these people succeed, because they've removed emotion and randomness from their trading. Success isn't flashy, it's disciplined, it's repetitive, and in trading, that's a very good thing. In 1859, a young man named Nathan Rothschild stood in the heart of London, surrounded by chaos. Britain was at war with Napoleon, and the financial markets swung wildly with each new battle report. Traders bet fortunes on the outcome, desperate to be on the right side of history. But while the masses reacted, Rothschild remained calm. He didn't chase rumors. He didn't panic at bad news. He had an edge, the ability to think in probabilities, not emotions. Through a network of couriers, he received news of Napoleon's defeat at Waterloo before anyone else in London. But instead of rushing to buy, he did something unexpected. He sold. Seeing this, other traders assumed the war had gone badly for Britain. Panic spread, and they dumped their holdings in fear. When the market collapsed, Rothschild quietly bought everything back at rock-bottom prices, and by the time the truth came out, he had made a fortune. Rothschild's success wasn't luck, it wasn't chance, it was a cold, calculated move, one that still plays out today, silently shaping the market while most traders remain blind to it. History may not have recorded the trades of every player at the time, but one truth is certain: not everyone panicked. The top 5%, who don't follow the herd, who don't get swept up in hype, they don't crumble under such losses. Have you ever placed what felt like the perfect trade, only to watch the price just barely tap your stop loss before rocketing in the direction you originally planned? It almost feels personal, like someone is watching your every move, waiting for that moment of panic before flipping the market. The truth. That's exactly what's happening. The financial markets aren't fair. They were never designed to be. They are built to exploit your emotions, to trigger fear, greed, hesitation, everything that makes you human. And the moment you react emotionally, you become the prey. Think about it. If you were running a hedge fund, wouldn't you prey on these emotions? Wouldn't you engineer price moves that trigger panic selling, only to buy at the lowest possible price? That price move is not random. It is the institutions shaking out weak hands before making their move. When price moves quickly, traders feel pressured to jump in, terrified of missing out, but this creates predictable liquidity zones, which institutions exploit by reversing the market. The institutions need to do this because they can't trade like retail traders. They need volume to fill their massive positions. So where do they look? Your stop loss. Smart money pushes price to obvious stop levels, below support, above resistance, round numbers. Retail traders get liquidated. Institutions enter at better prices, then reverse the trend. You go long at support, place a stop just below, and price dips just enough to stop you out, then rockets upward. If you are tired of being the market's prey, here are things I have done, that I still do, and you can do too. Think like a contrarian. If a move feels too obvious, it's probably a trap. The crowd buys at highs and sells at lows. Don't be the crowd. Use smarter stop placement. Don't put stops where everyone else does. Place them slightly beyond the obvious levels. Detach emotions. The best traders aren't the smartest. They're just the most disciplined. Trade based on logic and probability, not fear and greed. If you don't master your trading psychology, the market will use it against you. So, the next time you see price spike or panic when your stop is hit, pause and ask yourself, am I thinking like smart money? Or am I just another retail trader about to get played? Trading is often seen as a solo journey. Just you, your charts, and the market. But the truth is, no successful trader does it entirely alone. The top 5% traders understand that being part of the right trading community isn't about getting signals or tips, but about the support, accountability, and continuous growth. Trading can be one of the most isolating professions in the world. There's no boss, no team meetings, and no one to tell you when you're making a mistake. That freedom is great, but it also means there's no built-in structure to keep you disciplined. A strong trading community provides something that charts and indicators can't. A network of like-minded traders who push each other to stay disciplined, refine their strategies, and stay mentally strong through the ups and downs. Take, for example, Paul Tudor Jones, one of the most successful traders of all time. Early in his career, he worked under the mentorship of Eli Tullis, a veteran cotton trader. That mentorship played a crucial role in his development, giving him both the technical knowledge and the mental resilience needed to navigate the markets. Many traders join online groups or forums hoping for signals, hot stock tips, or get-rich-quick advice, but these communities often do more harm than good. They encourage impulsive decision-making, herd mentality, and emotional trading. Instead of developing a real edge, traders in these groups become dependent on others, which lead to inconsistent results and a lack of confidence in their own skills. Consider the GameStop frenzy in 2021. Many traders blindly followed the hype in online forums, buying at the top without any real strategy. When the stock eventually crashed, those without risk management lost huge amounts of money. A proper trading community wouldn't encourage chasing momentum without understanding risk. It would focus on strategy, discipline, and long-term sustainability. The traders who succeed long-term surround themselves with others who value discipline, accountability, and continuous learning. The right trading community isn't about spoon-feeding trades. It's about fostering an environment where traders help each other refine their skills. The legendary Turtle Traders experiment led by Richard Dennis is a perfect example. Dennis took a group of inexperienced traders and trained them using a rules-based system. They worked together, learned from each other's mistakes, and held one another accountable. Many went on to become highly successful traders because they had both a structured approach and a strong support network. Trading doesn't have to be a lonely game. The top 5% traders actively seek out others who share their mindset. Traders who prioritize discipline, strategy, and continuous growth. The right community won't hand you profits, but it will make you a better trader by keeping you accountable, supporting you through challenges, and helping you sharpen your skills. If you want to be among the top 5%, don't just trade alone. Find the right people who push you to become the best version of yourself. And in service of this very important part of trading, I have a gift for you. I've created a Telegram community where I share advanced trading psychology tips I can't share here on YouTube due to some production restrictions. These tips are designed to help you further fix your trading psychology and keep you committed to being a disciplined trader. In this community, I also share what I'm looking at in the market, what I'm looking to trade, and my personal high probability setups. And on top of that, it's a community where you'll get to interact with other like-minded traders and me, so that we can help each other become better traders. The link to the community is in the description of this video. But before you go, I have something else for you. It's another gift, one that could shift the way you see trading forever. It's waiting for you in this recommended video. Watch it now, and thank me later. Please don't forget to like, share, and subscribe to our channel if you are new here. It is equally important that you turn on the notification so you don't miss amazing videos like this in the future. Thanks for watching.